Good afternoon, traders. So, this correction we've been waiting for is certainly underway. There's no doubt about that, especially after today. Prices are coming down into this area here. They're stuck on the 20. So, they touched the bottom of that bar there, the gap up day, the bottom of the bar. And now they're getting closer to some price support. But that 20 MA could come into play. And you can see the crosshair there on the minor support, that upper level right there. And so now we go down to the 5 minute chart. Oh, we could look at the 65 minute, but it's basically the same thing, right? Um, you can see right there. So now the 5 minute chart is trending down, lower pivot highs and lower pivot lows. It tested that one, and sellers came in as they typically do. Excuse me. And so now we're getting a retest of this pivot. So just the opposite of this. So it's close to the support area or reference point, as I pointed out. Here's a pivot. There's a retest of the pivot. Now what we need to see is it pop up here a little bit. This bar's not done yet. It would be great to see a wide range bar. It's not even 1 o'clock, so it's not a great time of day. But if we were to get some stabilization here, this could be a low point for today anyway. And we'll just see where it goes from here. So we always look at other markets to see if they are on some support or stabilizing better than another market. Sometimes a different market reaches its support point and it starts to turn around and it drags the others with it. So that's why we always look at the S&P, the Qs, often the Dow, and of course the Russell, the more speculative one. So the Qs here are really in the middle of nowhere. So that area right there isn't really anything of significance. And this is the kind of interesting but situation today where you had the gap down and it could have moved up trying to fill that gap. It couldn't, so that's bearish. And so then it broke down and it had this stabilization. And here, this blue line is the opening price. And as it stabilized, it couldn't move up, and so it went down. And so fine. Inside that blue line was right on this little support area right there. So it broke that, and we can now get rid of it. We don't need it anymore. So pivot. It creates support. In this case, in the middle of nowhere. So the different concepts that we talk about, support, resistance, in an empty lie, we don't talk about creating support or creating resistance. That's getting deeper into the courses, because there are times like this where the perception is it's got to come down here because this is where the support is. Well, it may eventually get down there. It doesn't have to get down there. So it can create support where there is none. That's another one of the concepts that keeps us objective. Now, this is only a 5 minute chart, so it's only from an intraday trading point of view. Nonetheless, you can see the bottoming tail bar that's forming here, and it's starting to inch up. So if you were a scalper, right, day trader scalper, this would be a reasonable place to go long and look for some type of a bounce. It's not going to turn around the 65-minute chart, and it's not going to turn around the daily chart. That would be my expectation for the moment. I'd be totally surprised to see this turn into a bottoming tail bar today. So that's unlikely to happen, I believe. So we'll see how much this might bounce up or the lack thereof. You can see nice turnaround. It broke the low here, and I just mentioned in the green room about doing a put spread at the 58.45 strike. It's far enough away. It's under the 20 MA, and as long as this continues to lose momentum, that'll deteriorate. Now the Russell, it didn't quite reach that minor support level, and it hasn't reached the 20 MA either. So looking at KRE, which we always do to see if it's beginning to stabilize, and it is. We look at XLE, which was showing relative strength today and then just collapsed. It had pushed up here. When I say collapse, You'll see the 5-minute chart. It was showing strength, and then all of a sudden, bam, and it got clobbered. And USO, which was holding up, and it filled the gap, and then that came down, excuse me, and then, of course, had an effect on those particular stocks. SMH, we're looking for it to hold the area of this low. A lot of times it breaks the low. You can see on the 65-minute chart after it broke the low. Something in my throat here. Sorry about that. You got a bottoming tail bar. And so we'll see if this can continue to stabilize. Or, oh. All right. Diamonds, minor support area, coming down there. Financials holding up pretty darn well. So they look pretty good. Interest rates backing off a little bit. So some relief there, but markets are still struggling, trying to find that support level. And since it isn't at a support level that's directly to the left, as I pointed out here, it becomes harder. So traders need to gain some confidence. And how do they gain some confidence that this is going to hold? Well, they sit back and watch and see, somebody's accumulating here a little bit. There's no wide range bars. You got that little bottoming tail bar. So as it goes sideways, if that's in the cards to happen, continues to go sideways here, maybe it blips down and pops back up again, some kind of a pattern that creates a stronger support area. We've got this one pivot. Also, I'd point out that wide range bar there. And you can see as it was coming down, and you get a wide range bar, that's usually an indication that it's nearing the end of a move. Now, that doesn't mean it has to go up significantly, but momentum begins to stall is what it's doing right now. Now, the longer it goes sideways here without going up, the greater the probability that it'll dip back down again and start heading down here. We don't know. It's, the lunchtime period, volume is lighter, and so it's just jiggling around here a little bit, which is fine for a put spread because as momentum slows down, time decay eats up, that premium. So we'll see how that shakes out. What's doing well today? Just going to look over here. Utilities, but not an attractive pattern. Financials, which we looked at. Real estate, it's getting a little relief because interest rates are stabilized there. Energy backed off. Consumer staples, maybe bottoming out. If you look at the weekly chart, pointing this out in the advisory letter, that bottoming tail bar. So it may need another week or so. We'll see what happens. Or, hey, maybe it dips. We're looking for the daily chart. Again, we're looking for the daily chart to make some kind of a bottoming pattern here. Just because the weekly gives us a bottoming tail bar and it is at support, we then go to the smaller time frame to actually see some kind of a retest or some kind of a confirming pattern of our bias from the higher time frame. So the fact that this big nasty bar didn't follow through is the beginning of stabilization, but we need extra evidence of that since it's in a downtrend. Materials breaking down. Remember this big move that happened on the big China news, big China stimulus package, all of this soared. And now we've got a break of this head and shoulders top there. That certainly looks like it's going to the 200 or lower. You can look. I'm just looking over here for you for a second, just what's showing relative strength or weakness. Well, this is on the 20. Maybe it begins to stabilize, but something's getting killed here. Well, there you go. I just sorted that by percent change on the day, and you can see what's breaking lower there. Discretionary, really strong move, pulling back here. Amazon, that's in the sector, had a little breakout failure. That's pulling back. So, this correction is rolling through, doing damage here and there. There's McDonald's breaking. It's in that sector. And we'll see how far this goes today. Again, the major indices still look fine. And I've said this 100 times over the years. when we believe that some kind of corrective price action is going to happen, the markets always mask what will be happening under the surface, meaning there are going to be stocks that are getting killed and the markets will pull back, whether 3% or 5% or whatever it might be. Right now, this is so far pulled back. Eh, Not even 3% yet. And if it was down here to fill this gap, that would be about 3.75%, give or take. But there are going to be stocks that are going to be pretty well smashed. Healthcare getting killed. I guess this is part of RFK uh, coming into the cabinet, and I'm all for it. Just tell you, my all for this government being dismantled to on a certain level, and that this deficit that's out of control. That'll certainly be a good way of, like many of us would, you know, your debt is out of control. You got to start cutting expenses, and the government is bloated, and so start getting rid of it. What's unnecessary, and there's plenty of it. Biotech getting killed. So vaccines, um, Pfizer, and of course, Pfizer's not going away, but at some point that's going to become, jokingly say, undervalued or oversold, right? Because undervalued becomes more undervalued and oversold more oversold. But look, you just look to the left, it's breaking all of this support here. And if you look further to the left, where's it going to go? Well, we can go and look at the monthly time frame just to see what's there. And this certainly looks like it could go to 20, $15. Or the idea, again, of creating support, which would have to start with a pivot and then a retest and so on the daily time frame. So I hope this all helps. Have a great weekend. We're going to be having an open house in the green room for next week, so please consider joining us. And as always, if you have any questions, email us, Greg and Dan at Master Trader.